Good morning, everyone, and welcome back to Crypto Articles. Today, we're going to take a look at the markets. We're going to discuss yesterday's flash crash or small dip. We're going to take a look at some of the major altcoins and how they recovered. We're then going to talk about Ripple. We're going to talk about inflation, Cardano, Tezos, and Cambridge University. So stick around until the end. Don't forget to subscribe and smash the like button. Also, let me mention that we're doing a giveaway of $100. This is your opportunity to tell us what you want and to invest on. We will buy the coin and we will give it back to you with the profits on Christmas Day. So check out the Twitter in the description down below. So let's get started. This 360 table actually looks pretty similar to what it was yesterday when I did my daily video. Nothing has majorly changed, but we have seen all-time highs and daily crashes. So that's how quickly the crypto market moves. Major dips on Atom, ICP, and Monero that are still in place. Good recovery on most of the other altcoins. We're going to take a look at it now. So let's jump onto some bit of technical analysis. So for the ones that are not terribly familiar, this is just a way to analyze charts and find support and resistance levels and try to understand when the price is going to go up and down or break out in a certain direction. So this is just a chart for Bitcoin. On the 4-hour scale, we can see there is clearly a all-time high yesterday at about 69,000, and then we crashed all the way back down to 62,000 and then back up. So this long wick under the candle is actually very, very good, and we tapped into our support area down here. So this is pretty good. Of course, still pretty safe. Make sure you have your stop losses in place, but this is not as dramatic as it may look last night. Next up, Ethereum, pretty much the same. So Ethereum has been moving in a uptrending channel since the beginning of October. We had entry points at various levels. And as we've seen from last night, the price dropped nearly to the bottom uptrending line and then bounced back quite sharply. And we're pretty much the same levels as yesterday's morning. Polkadot, this is a one-day chart, so zoom out a little bit more. We see something very similar. We had a first resistance support level at around $49. We are still ranging in that support level. We're trying to turn resistance to support, pre-resistance to support. And then we had a much stronger support level at about 40 USDT, which is nearly where the price stopped yesterday before bouncing back. So we dropped to 42 and then bounced back to 48. Same story on Luna. This is on the 4-hour chart. We have a very strong resistance, which we're trying to turn into support at $48.55. This was in an uptrending triangle that broke out on the 4th of November. And then yesterday we crashed all the way down to 44 and then all the way back up today to 51. So this is pretty healthy. This tells me that bulls are not giving up. People are buying the dips. People are trying to get into the markets now. And this makes sense. We've seen the market going up like crazy. We're expecting a parabolic move from most altcoins. So I'm not surprised if people jump onto it right now at every opportunity. So let's talk about Ripple. Ripple to launch Liquidity Hub for finance firms that want to offer crypto trading. So Ripple, once again in the news, launching a new product. Ripple has announced a new service aimed at finance companies that will allow them to offer cryptocurrency trading to customers. The new service will target enterprise clients, giving them access to digital assets from a range of providers such as exchanges, market makers, and over-the-counter trading desks. Liquidity Hub will initially support BTC, ETH, Litecoin, Ethereum Classic, BCH, and Ripple, with availability varying by geographical location. So you may ask, what does this actually mean? Isn't it already possible for financial institutions and financial firms to buy cryptos? Well, it is, but it's not a guarantee. The exchange they may want to buy from may be down. They may not have liquidity. They may not be able to provide the coin they want to buy. So what Ripple is doing here is basically allowing their clients to buy and sell pretty much any point in time, ensuring that whatever transaction they promise will indeed happen. So remember, Ripple is a payment system mainly, so it allows for transactions of cryptocurrencies. And they want to make sure that they offer the clients a service that is highly available. So our customers would want to access to the same trusted one-stop shop for buying, selling, and all the crypto assets that has powered our own extensive work with financial institutions. So they basically using their initial on-demand liquidity product, and they're extending it to financial firms. Next up, we're going to talk about Rocket Pool, ETH2 staking service, which launched yesterday, which hit a stage to lock up in 45 seconds. So ETH2 staking provider only requires 16 ETH to run a mini pool, and stakers with as little as 0.01 ETH can put their crypto to work on the Beacon chain. We talked about the Beacon chain. This is the proof of stake chain, which went live this year for Ethereum 2.0. Now, it's actually quite expensive to jump onto the staking pools, and at least it used to be. And now with the mini pools, this is accessible to many more people. So the Rocket Pool is registered 237 node operators with 42 global locations and 1,088 ETH staked. The platform has now a total value locked of 4,000 ETH, which is about $30 million. Rocket Pool aims to become the primary staking infrastructure for Ethereum by providing a decentralized, easy-to-use staking network for individuals and businesses. During yesterday's stage 2 launch on November 10th, node operator Minipool slots maxed out in just 45 seconds after the launch. The launch of Rocket Pool marks the removal of several entry barriers for ETH2 stakers. To run an ETH2 node, you normally require a deposit of 32 ETH or $155,000. This will allow people to easily stake ETH into these pools and contribute to the ETH2 nodes on the Beacon chain. So very bullish news for Ethereum. Next up, let's take a look at traditional finance and economics. Let's talk about record inflation in the US. The record inflation prompts investors to take a closer look at Bitcoin. While the cryptocurrency market is moving up, the US inflation is also moving up, but it's not a good thing. So what inflation actually means is that your money is going to be worth less and less as we progress in time. So inflation at 6.2%, which is what we're seeing now, means that if we keep it steady for 10 years from now, so 2031, your $100,000 today will become $54,000 by then. Of course, you have to take in consideration compounding. So this is what inflation means. It means that your money is going to be worth less and less if we keep printing money. So as a result of the high print, traditional financial markets took a hit on November 10 as concerns about runaway inflation and the loss of purchasing power weighed heavily on the mind of investors. This is a contrast to the price action in the cryptocurrency market, where actually we saw a burst to a all-time high for Bitcoin and then slightly later a flash crash and a good recovery. So the rapid rise in inflation over the course of 2021 has led to an increasing number of calls for the Fed to end its easy money policies and raise interest rates. Global financial markets appear to be anticipating slow growth and low real interest rates for the next few years. On the other hand, we have cryptocurrencies. So cryptocurrencies holders are uniquely positioned to benefit from, or at least receive some shelter from the latest developments, because the declining value of fiat and currencies like the dollar has highlighted the power of Bitcoin. So let's take, for example, the stimulus check that was given out at the beginning of the year. Americans who put their $1,200 stimulus check in April 2020 into Bitcoin would now have $12,000 worth of Bitcoin. So we already talked about this in the past. We've seen this in the past in the news. And if the global markets and global economy keep moving as it is moving right now, there will be more and more people interested in jumping into cryptocurrencies. Then let's take a look and have a talk about the environment. So Cambridge Center for Carbon Credits is to build carbon credit marketplace on Tezos blockchain. It's a really good day if you're a Tezos holder. The world leaders have promised to end deforestation by 2030. And the Cambridge Center for Carbon Credits, which is based at Cambridge University, this week launched with the goal to build a decentralized marketplace of verifiable carbon credits to support global reforestation efforts. So the marketplace will be built on Tezos blockchain, and this is because Tezos is a combination of artificial intelligence and satellite sensing technology. The marketplace will use these technologies. This is because Tezos is also quite friendly to the environment and the way it's built. And the new center spokesman mentioned that the current accreditation systems that measure and report the value of carbon and related benefits like biodiversity, conservation, and poverty reduction are costly, slow, and inaccurate. This system have undermined trust in MBS carbon credits. What is needed is a decentralized marketplace where purchasers of carbon credits can confidently and directly fund trusted nature-based projects. And that's the gap the center is aiming to fill. So very good news for Tezos, very good news for the environment, very good news for cryptocurrencies. And lastly, let me leave you with a small piece of news about Cardano. So Cardano ADA staking addresses numbers well by 100,000% in 2 months. So the number of staking addresses, it's growing, has been growing for a while. And it makes sense. Cardano's price has been fairly stable. People are putting their money onto Cardano staking to actually gain some passive income from Cardano. And the number of wallets has grown nearly 1 million wallets at the time of writing, up from the 821,000 wallets on September 10th. The same data source shows that there are now $45 billion worth of cryptocurrency staked across 3,000 active pools, representing 72% of ADA supply. So 72% of Cardano is now being staked. This is really good for Cardano. We're still awaiting for a price breakout, but this is, of course, very bullish as a whole. We've seen Cardano running last year, so I'm expecting it to... it is quite okay for it to be a bit slower compared to the other altcoins, but we're also expecting to see a breakout fairly soon. All right, so that's it for today. Thank you for listening. Thank you for watching this video. Don't forget to subscribe, smash the like button, and check our giveaway in the description down below. Thank you, and see you tomorrow.